When we sell an item of inventory, we're going to be dealing with one of two windows. We're either going to sell something for cash, somebody comes to our counter, they put cash down, they pay for it, they walk out the door with the item. Or we're going to be billing our customer. They're going to come in, they're going to purchase the item, walk out the door with it. We're not going to get any money. We're going to have to bill them later and trust that they pay us. And so depending on which kind of transaction we're dealing with, it will depend on which window we access in QuickBooks to record the transaction. So we're going to assume for our first example that this is a purchase on account, and somebody is going to pay us at a later point for this. And so we're going to use the Create Invoices window. There are some template invoices that we can use. We can certainly modify the invoices or for our own customization, but using the template invoices that gives us a good running start. And the default accounts that will be used for these, because it's a Create Invoices situation, it knows it's going to be an accounts receivable. It's also going to involve cost of goods sold. And because we're operating under the periodic system, not perpetual, that's why we're dealing with cost of goods sold as well as inventory as part of this transaction. If we were dealing under the periodic system, we would not be dealing at all with cost of goods sold or an inventory. We would figure it all out at the end of the period. But because we're dealing with periodic, it will involve these two accounts as well. And then we have the sales tax payable and the sale, which is our revenue account. And it would look if we were doing a traditional manual system. We have debit to accounts receivable and cost of goods sold, and our credit goes to inventory, sales tax payable, and sales. So we're going to go over this slide really briefly, and then I'm going to jump over to the live version, and we will do this for real. So if we're going to record a sale of inventory, remember this is just on account. We'll worry about a cash sale in a minute. We're going to go into the Create Invoices, choose our customer. We're going to select the invoice template, which will involve a product invoice, so it has all of the fields necessary. And then date, and then we'll go into the items. And we should make sure that what we're selling, that tax and non-tax, that those are accurate. And then we may have to select a different taxing authority depending on if we're an e-commerce company and we're selling this to somebody in another state. We're going to have to choose which state, because while QuickBooks is smart, it's not smart enough to necessarily take the delivery address and automatically assume that that's where the item should be taxed. And this is what that will look like. And so I'm going to stop here and we'll go over to the live version. We're going to mine defaulted to a service invoice. So I need to make sure that I choose the product invoice. And then that gives us some additional fields here: price each, amount, tax, and let's just choose something for fun. Harmonicas. Oh dear, I don't have any harmonicas. See, this is what happens when you don't record your harmonicas when you receive them. QuickBooks doesn't want you to sell them because you have none. Yeah. Okay, so I'm just doing this as an example because right now QuickBooks is super unhappy that I have no harmonicas and I'm trying to sell 10. I'm trying to sell, one, at $10 each. This is going to be tax. And so we would choose, and in this case, Pennsylvania is where the taxing authority is at 7%. So make sure that we have the appropriate tax calculated here. If for some reason we need to change this to a non-taxable sale, we can do that. We got a memo, we got a little customer message, have a nice day, something like that. Oops. And we'll do, watch this. So this allows us to go back and make adjustments to our inventory, which I don't want. Purchase order terms are good. We want to know basically when we can expect money from this, so that when we print our aging receivables list, we can get an idea of who's past due and who's not past due. How we're going to ship it. Those are some common examples. And who's paying for the shipping. So I'm going to pause here and then go back to the slides, and we'll talk about what a cash sale looks like. And now we're back here, and we're going to talk about selling our item for cash. And just as a reminder, the entries for the cash sale are going to look like this at the bottom. And so instead of an accounts receivable entry up here as a debit, we're going to have cash or undeposited funds as our debit. And then we're going to be doing this transaction through the Enter Receipts window rather than the Create Invoices window. And so this is, and it looks very similar. And I'm going to pause here, and we'll just jump over and look at that. All right, so over here at our customers, and we're going to go past the Create Invoices and down to Enter Sales Receipts. And then we enter our customer here. We would go through and again enter all of the items that we had entered. This has our default Pennsylvania sales tax here. It's nice to record what check number the customer pays us with, because it will get printed on the receipt, and it just makes it look like we're being extra diligent. But they also might be paying us with an e-check or some other method. But we also want to record that too, especially cash and checks to segregate from our credit and debit sales, because accounting with credit cards, there's a whole other layer of stuff that we have to be focused on. So our item list is here. It will automatically populate with the description. It's still unhappy. I still don't have any harmonicas, and that part's not going to change. I'm not going to go back and put harmonicas in at this point. And so we would just print the receipt for the customer. We could certainly email the receipt. And that concludes this video. I will hop over to the next one.